Hey folks, Dan Frio here, the rate update. Today is November 12th, 2021. Did we get a rebound, or let's say a reduction in mortgage rates from the debacle we had on Wednesday? Stay tuned, that's what we're going to go over next. Okay guys, not a lot of news out today, but the good news is, or the bad news is, we're coming off a debacle market from Wednesday. And if you watched my video yesterday morning, you saw mortgage rates spiked about maybe 20 basis points, or almost 0.25%. They exceeded 0.25% in a 48-hour period. So the markets were closed yesterday, so I wrote the report, or I put out my video explaining what the rates closed on Wednesday after that complete bloodbath we had on everywhere, in the bond market and the stock market, on fears of inflation. But let's get into the news today. Did the market react appropriately or overreact? Well, we'll get to that in a minute. Really the only news out today is the JOLT index. This is basically job openings that are out there. The previous month we showed was 10.43 million people, or job openings. There were 10.43 million job openings. The consensus thought it would go down to 10.3. It went to 10.43. Okay, so not really any move here, is minute. So there's nothing really there. The tough thing is there's a ton of people quitting their jobs, okay? So an unprecedented number of Americans quit their jobs in September. A record 4.4 million people quit their jobs in September. That's what the JOLT index showed. So the odd thing is there was 500,000 people employed in the last report, but then they're saying 4.4 million people quit. So a lot of people are just shuffling right now. And I think the virus, the shots, have caused a lot of people just to say, I'm just going to hold out for now. They might hopefully be financially set or some reason, but that's part of what's happening. There's a conundrum right here that I can't grasp, and I'm trying to figure this out for you guys. And even the Wall Street bigwigs, it's just a weird scenario right now. So let's go on further. Here's the actual report that I read and get on the day that everything gets posted. You can see that there are actually 10.43 million job openings there. So now let's get to mortgage rates. These are why people come in, especially in the mornings, and view my channel. There's no difference. This is what I posted yesterday. It's the same rates because the market was closed yesterday. But let's see what happened. Are we recovering from that huge move that we saw on Wednesday? Well, the MBS market is recovering like I thought. Okay, yesterday I spoke and watched my video from yesterday morning. I said, you know what, this should be the bottom. This is way too much of a reaction in one day. Okay, right here. So we're starting in recovery. You can see the numbers up 11. So what is this? Let me summarize this for you real quick. This is a mortgage-backed security. It's a bond that trades on Wall Street that is the component or the biggest piece of what creates your mortgage rate. So that's why we follow this right here, the MBS market. We don't follow the 10-year Treasury. We don't follow the S&P. We follow this. This gives me some indicators. I follow these areas as well to give me some insight on what this should do. But this is the component right here, guys. So you can see on Wednesday, the market crashed. Okay, this represents the price of the bond, the mortgage-backed security. What happens when the bond price goes, we'll say on Wednesday, goes down? When the bond price goes down, mortgage rates or yields go up. You got it right. So if you said up, you're correct. There's an inverse relationship there, guys. So I'm like, okay, this thing just crashed. Think of it as a stock. Let me just put it in that context. If the stock dropped just because of there's some data out there, but it dropped substantially in one day, what will happen is that thing will either continue to crash if there's pieces behind the puzzle that warrant that. Right now, there wasn't really much to warrant this big of a move. Now, rates are going to go higher in the long term. This is too fast, too quick, too big. Okay, so I said we're probably going to recover, in the range of 102.6. Okay, so that's why I said the other day, we're all the way at 102.44. So we're 16 points away. Will we get there today? Maybe not. I think by probably Tuesday, we should be there. So I'm holding off on locks right now, locking in rates, because this is already baked in. If you did not lock your rate in prior to Wednesday, you might want to look to get a new loan estimate. I'm going to give you a promo here after this to show you how to send me your loan estimate so I can read it for you and put it into your own terms. And we're going to compare it to see if there's a better rate and lower fees out in the market for you. We're averaging about $2,000 to $4,000 in savings per client that sends me their loan estimate. So what's going on intraday so far? It's early, but the trend is good. We started and we rallied up. There's a little, I don't like this red candlestick here. There's means sellers jumped into the market at 10:30. I don't know what came out at 10:30. I'll dig in on that again. It's early in the morning. I just wanted to give you, what direction the markets are taking right now. The last representation is a green candlestick right here that is showing aggressive buying behaviors. So what I'm doing right now, I post the mortgage rates updates every morning to let you guys know where rates are. Let's go over those rates with you. And I'm going to show you this for a specific reason. Right here are the rates for today, the way the market opened. So the 30-year fixed rate, 15-year fixed rate, the FHA jumbo, and the 5-year ARM, here's their rates. These are the national averages. These are not my rates. So if your rate is much lower than this, be concerned. If your rate is much higher than this, be concerned. If your rate is right in line with this, we want to check the fees that you're paying for that. So all this we're condensing into an offer I'm giving you guys for me to review your loan estimates for free, and I'll get there next. So this is where rates are. Over here represents the change from the previous day. We reference this as 11 basis points, the 0.11. I'm giving you my lingo, so as you progressively watch more and more of my videos, you get it. Okay, so the 30-year fixed rate was up 11 basis points from Tuesday to Wednesday, basically, and then Thursday the markets were closed. So that's where we are right here throughout these numbers. You can see that 15-year went up 8 basis points, FHA up 6, the jumbo up 7, and the 5-year ARM up 13. So what does this do for you? Well, I'm trying to give you an idea where rates are. And then in my latter part of my videos each day, I go over programs, things to look for. Does it make sense to buy now? Does it make sense to refinance? Is a home equity loan good? Tax consequences? Answer any and all the questions that you have. If you have any, please post them down below in the description because I answer every one of those that aren't spam. Okay, so that's that. Here's what I'm asking people to do. If you're building, buying, refinancing, cashing out, in forbearance, please reach out to us. Give us a call. I'm going to show you how to do that. But if you're in the process right now of a mortgage, people are freaking out because rates are going like this. Once you apply to a lender, they have to send you what's called a loan estimate. That loan estimate goes over the loan amount, the house value, your address, and all the fees. I'll review that for you and see. Let me do your shopping for you. Let me go out in the market and see what is out there that you could get that might be better than what you're having. How do you do that? How do you find out more about me and my team? Well, the best way to do that is go to therateupdate.com, and it's going to take you right here. We'd love to talk to you. I like when people do online applications, but there's so much misinformation and miscommunications when you do it that way that I want to be precise with this, guys. You're financing the biggest asset you have, which could also be and will also be your biggest debt that you ever have. So you want to be careful. So call us to get a consultation, 1-844-775-LOAN, or schedule an appointment right here. You're going to click that, and you're going to schedule an appointment on a day and time that's convenient to you. Let us know how you want to do that, by phone or Zoom. I love doing Zoom because I can, you can go through and see my screen. I can see your mortgage statements and everything else, or your bank statements, pay stubs, and things like that, and analyze those. One of the offers we have right now is for me to review your loan estimate. How do you do that? We'll go to the resource section right here. You're going to go down and click Upload Loan Estimate. Right there. What it's going to do is take you to a secure site. You're going to click that you're not a robot, and then you're going to fill out this. It'll take you 2 minutes, I promise. In the message section, I need your help. First, I need the little story of what you're trying to do. Second, if you would, give me your phone number. I'd like to talk to you. If you don't want to talk, just say, don't want to talk, please email me. That's fine. The next thing I want to know, I need to know your credit scores. Without your credit score, everything else is a moot point. So make sure you plug in your credit score so I can review that as well. So that's it for today. I'm going to post a question to you guys. Why are so many people not going back to work, and why are so many people quitting? I'd like to hear your answers. So, put that down below. Let me know your thoughts. So that's it for right now, guys. I'll post later this afternoon with some informative information in the mortgage market should be of concern to you. And that's it for right now. So God bless, guys. Thank you so much for watching. I'll see you in a little bit. Bye-bye.